Morning, everyone. How are we doing today? So I wanted to do a second live stream with you to talk about Carl Icahn. If you're new to the investing game and you haven't heard who Carl Icahn is, do yourself a favor and go ahead and check him out. Look at Wikipedia or whatever you want. In real brief, he has been making massive bets in different parts of the economy since the 70s and 80s. He came to the forefront being what was called a corporate raider, leveraging junk bonds to basically acquire companies and do some massive changes way back when. He has taken on big hedge funds and different bets. He is not one to mess around, right? He gets conviction and he goes all in. I'm sure he is an active trader, but what I know about Carl is he kind of sits idle and waits to strike, right? He's sort of that individual that just sits at the plate, if you know the baseball metaphor, and just waits for his pitch. He's never in a hurry. But when he goes all in, he makes a huge bet. And this is important for you and I. He has been right enough times for us to at least pay attention and want to listen to what he has to say. He is at that stage of life where he doesn't really care what you or I think. I don't think he is talking his book. He doesn't need our money at this point. He is in the ninth inning of life and he knows it. And he's like, hey, this is what I think. This is what I got. I do think there are some hedge funds that still talk their book and look to screw you and I. I don't think Carl is at that point in his life. At least that's my opinion. And for what it's worth. What I saw from him is he had an interview on Bloomberg the other day that I've looked at on a recording. I've read a couple of summaries. And I wanted to talk about it because it's important to you and I because a lot of it is on the economy, right? Consumers. But most importantly, it's about real estate. There have been many headlines that say Carl Icahn has huge bet against real estate. Carl Icahn sees big downdraft in real estate. And if you see the headline, it could freak you out as a residential or even multifamily investor. So I thought we should talk about it. I got a whole page of notes from it was about a 20-minute interview. So let me go through them and then kind of summarize where I think he's got it and what it means to you and I. So again, if you don't know who Carl Icahn is, Icahn, Icahn, do yourself a favor and look him up for 30 minutes. I might even do a career highlight video sometime this week on him. He's been right many times, and we should pay attention. So for his first point is one that I think goes against the whole V-shaped recovery mindset. He's like, folks, the economy is not a spigot, right? It's not something you walk up to the hose, turn it off, wait 4, 6, 8 weeks, and then turn it back on. Good morning. Which I think is interesting. A lot of folks have just assumed, hey, once we come back, we give the all clear, everybody comes back. And folks, you got to pay attention. Carl's right. It's not a spigot. We have data from multiple companies and multiple countries now that yes, when the all clear comes, people aren't eager to rush out. Right? We have data from Germany that people aren't coming back to the malls. They aren't shopping, at least yet. We have companies in China who are open, like Starbucks and others who are like, hey, we're open, but it's not back to where it was. So when you realize that we're still, for the most part, in shutdown mode, meaning spigot off, you got to realize there's going to be fits and starts when we try to open this thing back up. And fits and start means weeks, months, and maybe quarters until any semblance of normalcy comes back. We just have to realize that it's going to impact earnings. It should impact multiples. This is going to take years to get back to normal, not months. And we should realize that at this point. And I think Carl is right. Another thing he is doing that we really should be paying attention to is Carl Icahn is hoarding cash. That's not normal. Right? Carl Icahn, to say that he's hoarding cash when cash has zero return, that means something. It means first, he doesn't, the whole first rule of Warren Buffett is don't lose capital. He's going to cash. Second, he's still in cash for a great deal, probably a larger percentage than normal. He's not deploying it yet. So it's again, don't be in a rush. The deals are still coming. There are still cash starved companies, the economy, and we're still, at least from the stock market, we are still our glasses are rosy. We still have expectations that don't meet reality. Wall Street and Main Street are disconnected like I have never seen and like Carl has never seen. Yes, I saw that interview with, or not interview, Mike Maloney on the Australian housing bubble. That is scary. Next up, let's talk about his big bet against real estate. Again, I don't know if it's on purpose or not. A lot of the headlines are real estate, real estate, real estate. Carl Icahn's betting against, Carl Icahn's a bear on real estate. Let's be clear. His bet is against commercial real estate. And to be fair, his bet on commercial real estate has been in place for months. He is cleaning up. So by commercial real estate, let's be clear. That's not multifamily, at least not to any great degree. It is office, and really it's retail. He has taken a massive bet against the mall, right? Think Simon Properties. He's like, I don't know that he's bet against Simon Properties themselves, the company, but that's what I want you to think about. He is betting against retailers in retail in the mall. I mean, just look at the non-payment of rent. That's where the greatest pain is in our economy, is the retailer, the strip mall. And that's where Carl Icahn is betting against. He is not, at least yet, betting against residential. Who knows what's coming? But that is currently not where his bet is. It is in the commercial market. So don't get it twisted when you read headlines that Carl Icahn is bet against real estate. There is a second thing against that. So his bet against commercial real estate is he is going short. He has found some indexes and companies to short. He hasn't really listed them in any great detail because he doesn't want to talk his book. But he's very clear. I am shorting commercial real estate with a significant orientation towards malls, retail, and some office. That's where he is. He is very clear that he thinks the stock market's disconnection is absurd. He thinks the earnings estimates that are currently on the street are insane. But his big hit is the multiple, right? The multiple that folks are putting on these earning expectations. He doesn't know how the earnings multiple can be so high, given we are in a pandemic that will take years to come by. He's like, I don't get it. He says he's never seen such a big disconnect there. So when Carl says that, and he's been doing this 40 some odd years and been right enough, I think it should catch our attention. And what he was really saying is, he expects some, he called them big downdrafts in stock prices. He doesn't know when they're going to happen. He doesn't know if they're going to happen, in fairness to him. But he says if he was a betting man, that he'd expect some pretty big downdrafts. And to me, what that means, and again, this is just my interpretation, he did not say the following. He's expecting a couple of big companies that are kind of trying to hold up the market to miss, or maybe not miss, but disappoint on the future. And once one of those 5 stocks in the S&P 500 that make up 20% do that, expect a big downdraft, and then expect another big downdraft. So it's not going to be a straight line. There'll be a problem, a fall, a baseline, maybe some up, and then another downdraft. He says this is going to go on a lot longer in the negative direction than most people think. And again, this is Carl Icahn, folks. Look him up. It's at least somebody we should pay attention to. And then he goes on to talk about the Fed. He talks about the Fed, compares it to 2008. Again, Carl made a ton of money, billions of dollars in the 2008 crash. He'll do it again now, just given how patient he is and the bets he's already making. But he says, watch the Fed, right? The Fed is pumping liquidity into the system. That liquidity has to go somewhere in the short term. That probably is why the stock market has flatlined or 16% from the peak. But he's like that won't hold. That liquidity will dry up. It's fixing the system. The commercial market is going to have a repricing. The asset, he is very convinced, given his short position, that the asset values backing retail and office will have a great repricing. There will be a great wealth transfer. There are going to be lots and lots of people hurt in commercial real estate. That's where he again sees most of the pain. And again, I'm not betting against him, right? I just, you and I, individuals on the street, can see that retailers are shut down. Those rents, for the most part, aren't getting paid. Office buildings will be changed forever. Not only the 6-foot social distancing stuff we'll have to put in the carpets and all of that, but you're gonna have the rotating schedules where half your people work from home and not. It's gonna be different for office and retail after this. And he's right. There's going to be a great repricing. There are going to be lots and lots of people hurt. And I wouldn't be surprised if Carl kind of invests on the short side, and then at some point, maybe 18 months from now, he goes long. He has been known to do that. When he thinks it changes, he just flips his bet, and he'll ride the up wave too. So in the end, do yourself a favor. If you don't know who Carl Icahn is, look him up. I think his resume would impress you. I'm actually going to probably do a Carl Icahn highlight reel sometime this week when I have time, but pretty impressive stuff. You got to pay attention. Look at the interview. Again, it is on Bloomberg. All right, everybody, take care of yourself. Have a great day. Bye.